Are you thinking about buying a home, but you think you have to have a ton of money to do it? Well, you might be wrong. Let's find out. Come on, let's go. Today, I'm here with my friend and mortgage broker, Carlos Ramos. I always say Ramos, but Carlos is here with me today, and he knows everything there is to know about getting a loan to buy a house. And I'm just going to ask him, Carlos, how much money does somebody have to put down to buy a house?
Yeah, it's probably one of the, top myths that are out there right now. Everybody thinks you got to put like 20% down, and you don't. The least amount of money, I think there's two loans right now that you don't have to put any money down. And if you're a veteran, which is probably the best loan out there, that's number one. And then USDA, you don't need any money for a down payment either. But let's go back to veterans. I think that's probably number one. I think a lot of veterans don't understand they don't need to put any money down as the down payment. So you got that. And then the next level up is conventional. If you're a first-time home buyer, only requires 3% down, but that only relates to first-time home buyers. That's it. Okay. And then a first-time home buyer is somebody who has not owned a home in the last 3 years. So I just want to make sure I put that definition out there. Now,
Okay.
FHA is a government grant, government program, and that the least amount of money is 3.5% of the loan, sales price. So that is probably the most popular loan that's available right now versus all the other programs that are out there. And then let me see what else is there. That's pretty much the gist of it. Because once you take any other loans, it's going to cost you more money down. Well, actually, no. Let's talk about conventional. Conventional is still 5% down. If you've owned a home before, then you got 10% down, 15%, and then you get to the 20% mark.
So why would somebody, if you could just put 3% down, why would somebody choose to put 5 or 10? I mean, obviously their payment would be a little bit less, but sometimes wouldn't you want to keep your cash earning interest somewhere else? I don't know.
I agree.
Tell me some of the benefits of putting more down or not
Yeah.
putting as much down.
Okay. So a lot of people want to put that much money down because oh, I want to have a cheaper payment and stuff like that, or I don't want to pay mortgage insurance or private
Mhm.
mortgage insurance. Now, the biggest myth was that is like it's going to be a huge amount of money. The mortgage insurance, oh, I'm not putting 20% down. I'm going to have a big payment with that monthly. And that's not really true because mortgage insurance is based off interest rates. So if you have a good I'm sorry, mortgage insurance is based off of credit score.
Okay.
So if you have a good credit score, your mortgage insurance probably can be under $50 a month.
Okay.
So that's not a lot of money. So if you want to put 20% down to save $50 a month, it doesn't really make sense when maybe you have some credit card debt that you can pay off or moving expenses.
Which
They,
is a higher interest rate.
yeah.
The credit card. Yeah.
Correct. So, and then also lenders too. A lot of people think that the more money you put down, the better interest rate you get. It's not really the case with mortgage companies. The mortgage companies are okay with if you put less money down, that you might end up getting a better interest rate if you put less money down. It's just a weird system that they go by how much they're going to make off interest over the life of the loan. So that's why it's important. So mortgage insurance to me is probably the biggest thing that why somebody will want to put 20% down. But I think putting 5% down, 10% or 15, if you really look at all the numbers and why spend $20,000 to save $50? It just doesn't make any sense. So
When you could take that money, keep it in reserves for emergency situations
correct.
in a interest-bearing account or some sort of money market or something like that,
Yeah.
you could do that. I was talking to my niece and her fiance a year ago, and they had just gotten married, and I knew I was going to be putting a house on the market.
Yeah.
And I know that they had just spent a lot of money on their wedding. They were renting a house, but I caught them at a family party and I said, are you guys thinking about maybe buying a house? I know you just got married and spent a lot of money. And they're like, no, we want to save more for a down payment because that's what they thought they had to do. And I was like, all right. So I listened to that. And then I talked to them, later. I followed up with them in the week and I said, you don't really have to have a huge down payment. You have closing costs and you have a
Yeah.
down payment. But I think you might not realize that you could actually buy a house and put down a whole lot less money than you really think you could. And that's what they ended up doing. And they bought a house and, it was good. And I was really happy. But I noticed that their generation, because they were taught from another generation, always 20% down, always
Well, I
20%
was gonna
down.
say that our parents were always like 20% down, 20% down,
Mhm.
20% down. But back in the day,
That's how it was
20%
done.
down, what is not as much as it is now. And I just think right now, if they put the scenarios together and they talk to a lender like myself and say, like, show me the numbers at 5%, 10%, 15%, 20% down, really explain to me the difference in the monthly payment and how much I would be saving if I did put 20% down.
Yeah.
Because like I'll give you an example. I just had somebody who wanted to put 20% down and it was only going to save him $100 a month. He was going to spend, I think, $15,000 more to save $100 a month. He had a credit card with $1,000, no, I'm sorry, $5,000 balance, and the monthly payment was $300.
Oh,
And I was like, look,
take
you'll
that.
be saving more monthly if you paid the credit card off.
Yeah.
And then once he realized that was the case, he decided to pay the credit card off and put less money down, and his monthly payment was actually better spending $5,000 versus the 10 or $15,000 to get rid of mortgage insurance.
Yeah. Nobody teaches you how to buy a house,
No.
They don't teach you how to get a loan, how to buy a house. I don't even know if they teach you anymore how to balance a checkbook because there's no
Yeah, I don't think
checkbooks,
so.
right?
Yeah, no checkbooks.
So, all right. So we now have announced you don't have to have 20% down. You
Nope.
don't have to have 15, you don't have to have 10. You can, if you're a veteran, you can do 0 down. You're still going to have some closing cost, but
Correct.
0 down. And then also a USDA loan, which if you go back to the video that we did last week, and I'll link it up here for you, that you'll be able to find out all the information about a USDA loan and where that's offered and how Carlos can find that for you. So that would be 0 down, but
Yep.
closing costs. So now what about somebody's credit score?
Oh, credit score, yeah. I think credit right now is probably one of the main factors with housing right now that is probably holding some people back because they don't realize they may have the credit or they may not, to buy a house. So when it comes down to credit score, there are a lot of programs like VAs, not really credit score driven program, but what it is lenders have overlays to say, okay, listen, we're not going to do a VA loan if it's below 580,
580
so.
credit score.
Yeah. So FHA's minimum is 580 for the standard FHA loan, but you can go down to as low as 540 with 10% down, maybe a
Mm-hmm.
little bit more. It's possible to do that, but usually the lowest credit score right now is FHA and VAs at 580. Conventional is like 620 is
Mm-hmm.
their minimum, but I definitely would advise at between 620 and 720, not good to go conventional.
Mm-hmm.
That's when you're going to start seeing the higher mortgage insurances, the higher interest rates. That bracket right there in there, conventional doesn't really like those credit scores. Even though it says minimum 620, it doesn't mean it's guaranteed that you're going to get the best rate or mortgage insurance is going to be high.
It's
So
going to
you
be
want to
high.
look at an FHA loan for that.
And just so people know, because Carlos is a mortgage broker, basically he has different product he can shop. So it's not like just going to Bank of America, which don't do. Sorry, I've never had a really good experience when a customer's gone to
Mm,
Bank of America. But a lot of people have the misconception that they have to go to the bank where they have their money in a checking or a savings account. And you also do not need to do that. In fact, those people, I mean, you've heard of bankers' hours before. They work whatever it is, 9 to 5. They
yep.
don't have a after hours cell phone. And when you're buying a house, you're not doing it during banker's hours. And sometimes you need a question answered. Sometimes you need an updated pre-approval letter, and you need it fast because everything when you're buying a house is time is of the essence. And if you cannot get a hold of somebody because it's a Saturday or a Sunday or it's 5:01 p.m., it's terrible. So I don't recommend doing that. I recommend exploring working with someone like Carlos, who, he does have his boundaries, as we all
Yeah.
do, but he
I mean, we
is
all have our
available.
family time and stuff like that, but I
Yeah.
think our time as a mortgage broker versus a banker is totally different because we are available on the weekends and we are available after hours. So it's just really going to depend on what you're looking for and what's happening and the type of loan that you're doing too.
Right. And you have access to things that that bank would not have access to. It's like going to a different store and having all different types of products. Am I right?
Yeah. Well, I agree. Yeah. The meat at Publix is versus different than Winn-Dixie, Aldi, and everywhere else. And that's pretty much how you can look at it, you know? So,
Yeah. Got to shop
hey,
for
I
your
just
meat.
used something to give an example. Or a butcher shop.
That's weird. That's why we get along so well because of our sick sense of humor here.
Oh, no.
So if you like that kind of thing, you got the right people. That's what I'm talking
You
about.
come to the right page.
Yeah, exactly. You found the right YouTube channel.
Channel. I'm sorry, channel.
Yeah, or wherever we are.
Money. How about let's talk about money? Let's talk about the biggest misconception. Now, this will segue from, carry over with the 20% down part. Let's talk about
Mhm.
that. How much money do you really need to purchase a home? Like, I think that's the biggest thing is a lot of people like, they see on other channels that they don't need any money and this and that. It's wrong.
Right.
You're going to need to put an earnest money deposit down on a property. A seller's not going to take their house off the market because you say, I'm good to buy a house.
Right.
That's not
So
how it
time
works.
out. That's just like, you know, Mr. Seller, I would like to buy your house for, I'm just going to use $100,000 because that's an easy number. I would like to buy your house for $100,000. Seller says, great, I'll accept your offer. And there's a lot of other things in that offer. But in order to secure your spot in a contract, you have to give consideration. Consideration is the deposit, which is the escrow deposit. And that is held by an the title company who holds all of our escrow deposits, and the title company keeps that money nice, safe, and sound and applies it towards the money that you bring to closing. So let's say
Right.
you put down 1,000 for $100,000 house. $1,000 would be a decent escrow deposit.
Yeah, I agree.
So it's going to vary by the price of the house. Or if you're doing new construction, sometimes they ask for your firstborn for sure. But yeah, so that's what an escrow deposit is. All right. So
Okay. All right. So that's one of the things that you gotta have money for. Home inspection, you should have
mhm,
put money aside for that.
that's like
Uh,
500.
so we have an appraisal that's gotta be paid. Another say 500. We'll just round it
Well,
off.
I saw a quote for one today for $650. So
Yeah. I think
they've
the
jacked
average is
them.
like 575.
Yeah. So figure about 600 for that. They'll charge you
Okay.
credit card for that.
All right. So that's that. So we have, let me just recap. So we have the earnest money deposit, the down, and then we have home inspection, appraisal. Okay. And then
WDO, which is
if you have veteran, you're gonna need a pest inspection.
right. Well,
Okay.
and I always recommend it
I'd
no
say for
matter.
everybody.
Yeah, so
Yeah, everybody.
that's about $100. It can be about 125, but 100 would be a good average. If you have a home that has a septic or a well, septic is going to be about 600 these days. Well, I haven't done a well inspection for a while, but I would say just 500-ish.
Yeah.
And then
Then I would say condos. In Florida, we have a lot of condos. You have to be prepared that you're gonna have to pay a condo fee. Okay, this is for a condo questionnaire is what I'm talking about.
mhm,
So for lenders, we need a questionnaire filled out. We send it to the HOA, they fill it out. They charge you as a buyer that fee, and that can run from, I think I've seen it from $300 to $500.
yeah.
So, and that's another fees. So those are a few things that you have to have in advance to be prepared to buy the house. So now that we have the appraisal, all those other fees, let's assume those fees combined come to, I don't know, say $5,000. We'll just say that.
Mhm.
5,000 cash that you need, earnest money deposit, appraisal, home inspection, WDO, condo questionnaire. We're gonna use that as an example, okay?
Okay.
Most of that stuff gets taken off at closing, other than home inspection and condo questionnaire. That is not part of like deduction from the closing costs. But if you put an earnest money deposit, we're gonna give you credit for that at closing. You're gonna get credit
Mhm.
for that. You pay for an appraisal, you're gonna get credit for that. So those are the majority of the fees that a consumer should be aware of when they're purchasing a home. And then, of course, they're going to have their down payment, whether it's 3%, 5%, whatever it is.
And you can work up a worksheet for them about that. So you can,
Absolutely.
it won't
Absolutely.
be guessing. It'll be if you buy a house at this price, but for the fees of the individual vendors,
Yeah.
but you will know exactly what to expect in a disclosure type of format that you're going to have, to
Yeah.
bring to closing. And Carlos,
Yes.
when someone calls you,
Yes.
you're not going to say, you need to pay me, give me your credit card number, and
Oh,
you need to pay me right now. How does that work?
yeah. It doesn't work like that way for me. I know there's a lot, there's other mortgage brokers and stuff that will charge up front for credit reports.
Mm,
Credit report fees have gotten really expensive. That's not the case with me. With me, it's free to talk. I take down the application, pull your credit, see what we can do. There's no fee to do so. There's no application fee, anything like that. So that
So
saves you
you
money.
pull their credit. If you pull their credit, is that going to hurt them in case like they go, well, I don't want to, I decide not to buy, or like,
Yeah.
does it
Well, I
hurt
could do
them?
a soft pull. I can do a soft pull, which will not affect your credit score.
Yeah.
But once you get under contract, a hard pull is going to happen. The credit scores, I think the average is between, 1 and 10 points, which is not really a lot when it comes to buying a house. And that's another misconception when it comes to credit pulls, is a lot of people think, well, I don't want my credit pulled. Well, when's the last time you had your credit pulled? I've talked to somebody who said that they didn't want me to pull their credit. They were worried about their credit score, but they didn't have their credit pulled in 2 years. It's like you didn't even know what it was before. So you're gonna have to. The bottom line is your credit's gonna get pulled. Okay, if you're coming to somebody like myself to say, "Hey, Carlos, I need $500,000 to buy a house," I'm just using that as an example, and I don't know anything about you. I mean, why would I not pull your credit? Why would
Right.
I not check your pay stubs,
Yeah.
your bank account? You know
You
what I
have to,
mean?
yeah, you have to be prepared for that. So
Yeah.
that is, you have to be prepared. You might not have to have it all like right on the first initial phone call.
No.
You'll work them through that. And in fact, we're going to keep doing these videos. We're going to keep making a series of videos to help you guys learn this process, know what it is that you need. And I think next time we talk, Carlos, I think what we should do maybe is talk about some of the do's and don'ts
Ooh.
you should do like while you're in the loan process. Maybe you could talk about all the documents that they're going to need to provide to you, but
Yep.
then also during that 30 to 45-day window from the contract to closing, some of the things, the pitfalls they should avoid. My name's Allison Newlon. I'm the broker owner of Platinum Properties of Florida, and Carlos Ramos with Highland. Is it Highland Mortgage now?
Yep. Highland
Okay,
Mortgage.
Highland Mortgage. And his contact and my contact will be in the description below. Make sure that you hit subscribe and you can come back and continue to watch our series.